The Hedgeless Horseman here. It's February the 7th, 2025. I will try to get through quite a few companies with news out. As you know, typically I end up ranting about investing or about a single case so long that time runs out, but I'll try to get through what I planned. So you have to forgive me if I'm a bit quick. First of all, thanks to the sponsors. Markets. Gold actually, I think, hit a new all-time high today, then retraced back a bit. Silver down. Crypto, I mean, not doing much, I guess. Yeah, copper actually has had a pretty good run today. Again, it's like absolute noise. The gold juniors are pricing in, I don't know, I mean, some of them maybe $1,700-$1,800 gold. There's developers or advanced explorers out there with really good, or projects that would work very well at $2,000 gold, and they're selling like they don't really have anything much of value. So I mean, if ever there was a time where the gold price in the short term is noise, that would be now. But that of course will not keep 95% of people from being short-term traders like always. I mean, they miss the bigger picture. If they think the next move in gold is down, they're gonna sell. If they think the next move in a junior miner is down 5-10%, they're gonna sell. I mean, they're always chasing the perfect track record, the perfect trade record, despite just pissing away money, basically. Because let's face it, almost nobody actually makes money, and that's because everybody's short-term focused, and the hunt for perfection basically ensures that they will not even have good returns long-term. The hunt for short-term perfection. Long-term, it's an absolute no-brainer. The next big sector move for juniors are going to be up. And that's what I'm positioned for. Weekly reminder. I'm going to get to that. Well, I can take that now, actually. There was an interview by Resource Talks. They had Michael Gentile on. I think he said a lot of good stuff, a lot of common sense stuff. So it's like you can tell he's very good at what he does, which is investing. And obviously, if I'm not mistaken, I mean, that's how basically he made his money. Not necessarily in miners, but he has the thinking right, because again, what he says is common sense. So I would very much recommend listening to this interview, and again, thinking about his answers to different questions. So yeah, really good, and that's, in my opinion, I mean, that how I prefer to do it, or I mean how they other people say you should do it. It's like, learn from the best. This guy, he's not a guy teaching at a university about the rational market hypothesis and how you should go about on paper how you should be making money. This guy actually makes money, has made a lot of money, probably worth tens if not $100 million, if I'm not mistaken. So those, in my opinion, are the ones you should be listening to. And also, it's like, the Rick rules. And even, I mean, Eric Sprott gets a lot of flack because he owns so many companies, and obviously many of them are quite high risk. And during a bear market, he's gonna look stupid in like 70-80% of cases. Still, Eric Sprott is obviously not poor. And just like he showed with, the best example might be Kirkland Lake, I guess, Fosterville. He made a shit ton on that. I mean, that paid for, well, I don't know how many juniors. Probably paid for every single other loss he had over that time period. Which goes to show that you don't even need to have a high batting average. You just need to have some kind of a strategy, and it's much harder for Erik Sprott to make money in this sector compared to us, because his portfolio is so large, or his net worth is so large, that he can't really enjoy the kind of opportunities we can. I mean, if you have low enough of a small enough of a portfolio, you can. I mean, if you can buy let's say the cheapest junior you find, and you can buy $1,000 worth or $5,000 worth, and that's, let's say, 10% of your portfolio, and it is in fact the cheapest stock around, that's going to have material impact to your portfolio, whereas Erik Sprott might have no hope of even buying that, so he'll have to go down quite a bit in risk reward maybe to actually get a position that matters to him, because obviously if he's not going to care about being able to buy $1,000 worth of even the best junior. It would need to go up 1,000,000% basically to have any meaning to him. Anyway, so otherwise, and he kind of actually talked about this. I mean, I always like when I have my ideas about how one should be positioned and how one should invest, and then you listen to a guy that's worth a shit ton of money, and he basically says the same thing. Then you kind of know that, okay, I'm probably not I'm not dumb. So yeah, just this fact, of course. I mean, this is an idealized, or whatever you would call it, scenario, meaning it's like when this sector is very hot, this is some junior, might have been first Majestic or something, I'm not 100% sure. It doesn't matter really, it's just supposed to show a cyclical sector, a very volatile cyclical sector. So I mean, at the highs, when stuff is expensive, when everybody's in, and when everybody's buying, and have no, as always, concept of price versus value. I mean, they don't have that at the bottom either, but that's why they're selling, and that's also why they're buying at the tops. The next big longer-term sector move is down. So if you're diversified during very high valuations, sure, they might go up more. I mean, this might have been expensive here, didn't stop it from going up there, but that sooner or later the next big move is going to be, like, for the sector, for the juniors, going to be down 80% or something. So if you're very diversified at the top, you're making sure that you're going to catch the next big move to the downside, right? And ounces in the ground, mature projects that are valued at $200 per ounce, and nobody will still, let's say, buy it or develop it, so it's just, again, a trading sardine really with ounces, an optionality play, so to speak. That those ounces are sooner or later going to be priced at whatever, $20 per ounce during the extreme low. So that's what you have in store for you. In that case, and that's actually what Michael Gentile also talked about, it makes more sense. And I've said this for quite some time. It's like peak merit of beta, diversification, proven success, ounces in the ground, sunk costs, birds in the hand. Those have the risk reward in those cases go exponential the cheaper it gets, because you already know you have anything, so you will have something to revalue, right, to the upside, opposite of buying those kind of companies during a high. But during a high, I mean, and he also talked about this, that I mean, if successful projects, let's say, legit deposits, let's say they're trading at $1 billion I mean, legit deposit are already trading at $1 billion now, but that's because they're worth like $3 billion on paper now. But let's say whatever, a decent big project is worth $1 billion in the future, or at a high. And you might think that's almost overvalued or fair value or whatever. If you find a cheap junior with, like, 10 million market cap company, they have a legit chance of discovering something that, if they find that it's worth $1 billion, then it makes a lot of sense to not buy the ones that are fair valued or overvalued, and buy the ones that have a shot of actually creating value enough for it to go up, 20, 30, 40x. Now, when you can already buy proven success very cheaply, any early stage explorer, it's like, I mean, what was I gonna say? I mean, I can almost not stop talking about it. It's like, First Nordic, for example. I mean, they're Barcela deposit. I think it's a tier 2 project. Basically, almost no juniors out there will ever find such a deposit. So any given junior looking for a good gold deposit have, let's say, 1 in a 500 chance of the average junior. 1 in a, I mean, I've heard, 1,000, 2,000, 1 in a 2,000, 1 in 3,000, whatever. Let's say extremely, extremely low chance of any given junior to be able to make a tier 2 discovery. So first of all, that's obviously their chance of making such a discovery is extremely low. If they do, it's going to take years and tens of millions of dollars to prove that. Now we can buy that risk taking that's already proven to be successful. The money's already been spent, the time has already passed. You can buy that for less than it would to redo that, and you're not even taking any risk. So I mean, just absurd risk reward in the legit post-discovery place right now. Also, beta has peak merit. Why? Because the next sector move is up. So if you want to make sure to catch the next big sentiment swing, you should be diversified, because that means staying power. You're going to catch an average of the juniors, whatever. So I mean, during these runs, it's like the whole sector goes up. If you're extremely concentrated, for example, and let's say, I mean, the worst in a sense you could be right now from a risk reward standpoint is obviously very, very concentrated in alpha risk. Like if you have 2 juniors, they're both pre-discovery plays. One is looking for, or let's say both are looking for gold, and we know that gold is at record highs and the gold miners are making record value. So a gold mine on paper, well, not on paper only, at this point in time, gold mines have never been more valuable. So it makes sense to go out and look for what is valuable. But again, the opportunity cost to date, you can buy what's already proven to be valuable, a post-discovery story, a resource, a advanced stage explorer / developer, without taking the risk, and you're getting all that value, which might be 10 times higher than what it's selling for, without taking any risk. So basically, you hit the lottery ticket from a code exploration standpoint. But you can buy it later. So it's like an exploration play, but it's rigged in a sense. You already know they made a discovery. The market has just not priced that in yet. Versus, okay, yes, early stage explorers are cheap and whatever. So that of course, again, it's like if you buy if you have 20 different early stage explorers at these bottoms, the ones that actually end up making a success, a discovery, might have absolutely outrageous returns. Let's say this market goes up for 2 years from now on. Let's say that company makes a discovery and grows for 2 years. So it increases the value of the company by 500%. And the sector sentiment goes up, so any success is priced 300% higher. I mean, that's how you get 10, 20, 30, 40 baggers, etc. My point is that if you're only into, let's say, concentrated alpha risk, so you have those kind of stores, which could become 10, 20, 30, 40, 50 baggers, but the chance of them becoming that is like 10%. And usually that's relatively high. I mean, for the average junior, that's relatively high, because most juniors have shit projects anyway. And right now, most juniors don't even have money. But let's say you have 2 juniors, 10% chance of success, high risk, high reward. So you're alpha concentrated. Chance of both of those stories failing to make a discovery would be 81%. In that case, there's an 81% chance that you have end up having no ounces in the ground, or no tangible success at this point in time, and have no then value to revalue in a sentiment swing, because you also kill the story. Let's say one target companies. Let's say one target companies. So 81% chance of killing the story, and even at these low prices, expect the junior to go down 50%. So you kind of cut your portfolio in half, when the low-hanging fruit is the big next sentiment move, which is higher. That is absurdly costly in the long run. Whereas if you just were okay with like, okay, I'm not going to get 20, 30, 40 baggers or the potential of that, but you just pick 20 juniors with ounces in the ground and you're like, okay, I mean, if I have 20 above average quality juniors developers, basically you're making sure you're going to catch the next sentiment move. And let's say they are some of the cheapest ounces in the ground, or like relative to quality at least. So it's like, okay, this is going to revalue at least 300% to the next high. And you're diversified enough that you're going to get that. And sure, some might revalue maybe 150, some might revalue 600%, whatever. You're making sure that you're getting at least 300%. That's years worth of returns, and you're making sure to get them. So in that case, obviously, it's quite risky from a long-term compounding perspective. If you risk 81% chance of cutting your portfolio in half, and there's no like holding period that can save that because the projects are killed in a sense. I mean, you I don't know how many years, how many cycles you need to play right again to make up for that mistake. Or mistake. Yeah, I mean, in a sense, it is a mistake because it's way too greedy. You're not appreciating where we are in the cycle. And of course, then you have the odd chance of like one making it or two making it, and you actually do end up, 10, 20x your portfolio, assuming you could actually hold it through. I mean, the stress of holding your portfolio that, let's say, goes up like that and not selling, those are very low. So in theory, it might sound, a lot of stuff sounds good in theory, but it's in practice, it's almost impossible to do it. It's like some positions, I have where it's like, they're very, very large because I think the risk reward is super, super good. And in my mind, it's like I could legitimately, let's say you have a story that's like, this is going to get acquired. You think it's a very, very high possibility of it getting acquired. That would be a natural exit at the peak, like a Great Bear story. The highest price of that stock came as it was acquired because it had a premium, right? So that's a natural exit. If you think something has the potential or will probably get acquired, you can almost assume that the natural exit, which is an acquisition, would be the point of peak returns as well. So in your head, it's like, well, theoretically, I should be able to hold this because I'm so convinced that they're going to get acquired that my play could be that I just buy this super cheap, never do anything with the position, just wait for it to get acquired. It might be 1 year, 2 years, 3 years. Whenever that point is, I'm going to make bank, and you think that's a very high probability, and then you will have max returns. Sounds great on paper, but in reality, it's like, if you have a very large position because you think that's going to happen, still, I mean, are any of us going to be able, assuming we're right as well, and it starts to, let's say, revalue. So you have a really, really big position. It's up 200%. Assuming it's like the rest of the portfolio hasn't done much, maybe, I mean, the position size would just be outrageous. So then it's obviously hard to like play that through. That's why your reward and risk, when you consider your investing approach, your strategy, you have to be able to translate that to the real world. You can't have, again, I bet there's a lot of people that on paper take an approach that makes sense. I mean, when they think about theoretically, if I do this and that, that's, the risk reward stacks up favorably. My buy and sell condition, on paper gives this a good risk reward bet, and preferably over the long term. But in reality, you might not even be able mentally to catch the needed reward side to make up for the risk, for example. And in that case, it doesn't matter if it's a good paper strategy, or you may, I mean, again, on paper it makes sense. But if you can do it in practice, then it doesn't matter. It's only the strategy, the buy and sell conditions, whatever. that you can actually execute in the real world that matters. I mean, okay, it's not maybe exactly the same thing, but I'm just going to point out, like I always do, about the fact that everybody has heard the idea buy low, sell high, but nobody actually does it, right? So on paper, again, everybody knows what to do, but nobody can do it in practice. Buy low, sell high works very, very good in a cyclical sector if you can actually do it. If you can't do it, it just sounds good, but you'll end up losing money because you're going to end up buying high and selling low, right? Yeah, I mean, I've shown this before, but I like this one. The trader considers themselves successful. I mean, you can read it. Yeah, so kind of goes back to what I've said before. It's like if you're a momentum trader or a short-term trader, which almost everybody is, there's no real edge. The edge doesn't move exponentially in a sense, unlike let's say longer term, whatever, sector swing trading. Up here, the next short-term move might as well be up or down. Nobody knows. Same thing here. What changes is the magnitude and probability of the next big move being one way. Down here, the next obvious big move is going to be to the upside. Up here, the next obvious big move is going to be to the downside. Doesn't mean they can't go cheaper first or more expensive first. So at extremes, in my opinion, it's like if you're a trader in a classical sense. I mean, whatever. It's like you have. I don't know what the average accuracy or historic accuracy is for every single trading pattern, for example. But let's say it's like 65% of the time head and shoulders formation works, or a bull flag or bear flag, whatever it might be. Maybe 65%, and then it's the returns are kind of capped in the sense depending on what happens. Obviously, I mean if you have a bigger whatever flagpole, then some kind of pattern that means okay the upside is this much. So yes, that changes a lot. But it's like when this sector gets more cheaper and cheaper or more expensive, I mean the future returns without trading, just from a swing perspective, goes exponential, and the closer it gets to that swing position. So at the lows you can take huge positions because the risks are low and the future returns are very high. So I would say it's like at extremes the merit of trading goes down as well, especially again short-term trading, because there is no obvious edge that for sure the next obvious move is up here or down here. It's like nobody knows, but it's like at the bottoms especially, maybe it's like you know that it's a matter of time. Yeah, anyway, I'm already ranting here. I don't know if I've gone through this. First Nordic announced the start of top of bedrock drilling program at Harpsund and Brokojan targets in Sweden. Again, you can look at the scale bar. These are very, very large targets. Ikari fits within 1 kilometer, so it's like theoretically, I mean this is a soil anomaly obviously, but like you could fit an Ikari here, you could fit two and a half Ikari here, 2 Ikari here, a Borealis deposit here, basically a Borealis deposit there. So it's like not material per se, but this news release just shows that like this will all get tested. So what the market doesn't care about now, it will kind of be forced to care about at some point, and especially if they make a discovery, then you get, and especially since now nothing is priced in anyway. So like I discussed with another First Nordic shareholder recently, very smart, savvy guys. Like I said, I mean, to me, First Nordic is one of the best pure exploration potential stories in the gold space, coupled with one that's also basically one of the lowest risk and most probable upside, just from a margin of safety perspective. Usually, as always, you have either or. A story is either an exploration story. I mean, the ones that have like huge exploration potential, they tend to be the ones that don't have anything, but they have really good targets. So in case of success, it might go up a lot. Well, First Nordic is cheap enough at, what is it, 120 million, that if they find a multi-million ounce deposit or two, without even considering Barsele, that could be a 10-20 bagger just based on the exploration potential. But then you have to account for and that's why, or therein lies the beauty of the risk reward. When you account for the fact that they already have one of the best deposits in the world, and it's not anywhere close pricing in that value, you have a very, very, or extremely asymmetrical bet, because it's so cheap just based on what's already there, that it's basically, the way I see it, just a matter of time before it becomes a multi-bagger. And then you have this free option on the back of it. So you're getting some of the sector's best exploration and highest blue sky exploration potential for free at this price, while at the same time you get a probable upside by the fact that it's not anywhere close to pricing in what's already there, what's already been drilled out by NICU. And that is why I think it is probably the most extreme risk reward I've seen in the gold space since I started. Does that guarantee we're going to get a 10-20 bagger or whatever? No. I would put the odds of making money in First Nordic, some of the, I don't want to jinx it, but it's like very, very high chance of that happening. And that's why I have such a large position, because I don't know a single junior that is, let's say, has as good of a tangible margin of safety, a project that is as good as Barsele, selling for so low a valuation compared to that, plus have, I think we're up to 9 1 to 5 kilometer long targets in a tier 1 jurisdiction with extremely good infrastructure, a low cost jurisdiction, low cost area with low taxes. Yeah, I don't know a single story like that, but if somebody knows, let me know. Here's also, I found an older article from 2021. This was when Barsele Minerals, and First Nordic is not the same as Barsele Minerals. Barsele Minerals, quote, only had the Barsele project and the Barsele deposit, and gold back here was, I think, I don't know, $1,800. So First Nordic is much more valuable than, First Nordic today is much more valuable than Barsele back here. I think I don't know exactly the market cap back here, but you can see some, I mean, comments where it's like, Cope is not shy about his plans for the Barsele Gold project. He's going to expand the resource and sell it to the highest bidder. Barsele hired BMO Capital. And they also say it's like, the plan basically to, here you can see, there will be a huge exploration program, decide to get the resource to that 3.5 to 5 million ounce range. And again, the amount of projects in a tier 1 jurisdiction that are expected to be actually high margin, and I'm not meaning, yes, at $2,900 gold, almost every project is high margin, but like tier 2 kind of margins. I think Barsele could have all-in sustaining costs of like 1,100, and that's not a lot of mines in the world that has that. So if they would get to this range, it would be one of, extreme rarity in this space. There are 3 to 5 million ounce deposits out there, but not really good ones. You have the Great Snow Line discovery, obviously, but again, their problem is that the infrastructure is non-existent, basically. So Barsele doesn't really have any of those typical weaknesses. I mean, it basically checks all the boxes that I can think of. BMO thinks that BMO thinks that at that point there'll be 8 to 10 mining companies that will be all over Barsele because of the jurisdiction. We've got 3 power lines going right through the middle of the project, cheapest power in the world, around the 2 cents per kilowatt. That's power cost, hydro. A flat tax of 22%. I actually think it's a bit lower than that now. And a highly productive labor. Excuse me. Now that we have 100%, we can sell it to anybody. I think he's correct in his assumption, and we know that Newmont was standing by to see the project. Compare that to today. Again, if they consolidated Barsele, they would still have the Barsele project and 100% of the Barsele deposit. And already back then, BMO expected that 8 to 10 mining companies would be all over Barsele because of the jurisdiction, obviously the quality of the deposit as well. Still, I mean, that's the funny part. Like, First Nordic has what appears to be a discount because it's in Sweden, and I think Sweden is going to, on paper, be a top 10 jurisdiction in the next Fraser Institute. I don't know when the cutoff date might be, but it's like, I don't know many tier 1 jurisdictions, Western world jurisdictions, that are going so obviously pro-mining. I mean, the news just keeps coming. Anyway, so you get an idea. It's like if 8 to 10 mining companies would be all over Barsele when gold was, I don't know, let's say $18, $19, $2,000 per ounce. How many of those companies and more and maybe bigger would be interested in First Nordic if First Nordic consolidates the project, because now the land package is 100 kilometers plus they have 900% owned targets, which is, I mean, Barsele Minerals didn't have 9 multi-kilometric targets to go with the Barsele deposit. And then, of course, as investors, we also should account for Ojärvi, which I think in this market could probably, I mean, even in this crappy environment, 20-30 million market cap spin out, so you're getting that back basically. And that's not a low thing, because if you consider it's like, okay, I've got 20-30 million that I'm gonna get back just from Ojärvi, then we subtract that from the market cap, then you subtract the cash, which is like 10 million, and there's a bunch of warrants in the money as well. But that obviously dilutes it a bit. So, but if we just use the cash they have, so it's like, okay, 30 to 40 million, we would take that back just for the Swedish portion. That brings the market enterprise value quote to what, 190 million for 45% of Barsele, tier 2 deposit, and 100% interest in 9 multi-kilometric targets. Yeah, it's just obscene. Goliath, I don't know exactly why I actually, this is, my tabs are from when I was supposed to go through this some days ago. I don't know exactly why, again, I put a Goliath. Well, maybe it was because there was no new news out, I don't think. No. Okay, so, well, I guess we can talk broadly. It's like, well, I think I was gonna talk a bit about Blue Sky, for example. So we know what the market cap is right now. Huge volume today, by the way. Geez, 790 million. Okay. So it's churning a crap ton of volume. A lot of shares being traded. A lot of yeah, I mean, if you take the volume times the, dollar value, let's say, dollar volume is huge. So let's actually do it like this. I might actually, maybe I should have looked at it short, but I talked about this, I think on K Report and in some other podcast, that, I was waiting / expecting that Goliath at some point in time would kind of break out of this range, and that would coincide with the market and the narrative kind of accepting that, hey, this might be a tier 2, tier 1 type discovery. So here I think just the market being the market and a bunch of trading, now it broke out. So now I think it's kind of the market is accepting that this might not be a run-of-the-mill discovery, but a significant discovery. And of course, I don't like timing or short-term orientation. That's what I said in my last video as well. My idea is that, well, if we think about it, like if this, and I probably said it back then, if this is and becomes a legitimate tier 2 or world-class even discovery, and we have gold prices around where they are right now, I mean, what's this worth? Obviously, we can see what the short has done. We can see how many, whatever, what other juniors are trading for out there, and it feels like this is high in a sense. I mean, if this was 2016, I think if this was 2016 at the, you know, after that epic rally, I mean, I think Goliath would already be trading at $1 billion or something, rightly or wrongly. So I guess what I am saying that there's, I don't know exactly how this is going to play out. Obviously, we know that some of the assay results are really impressive, and I haven't redone the, you know, inferred resource calculation. I don't know if they maybe have stopped doing that, you know, when they put out, you know, theoretical tonnage for each zone basically. But we know, okay, they have a very large land position, yes. We know there's a lot of gold there. They don't have a resource, but we know they've hit all over the place. We know pretty much, I think every zone almost is wide open. I don't know if I've seen these slides before. Stacked shears, kind of pogo-like, sure bet, yeah. I mean, we have a sense that it's like, okay, this is already very big. Obviously, not everything is going to be economic. So it's like, even if you have a mineralized plain like this, it doesn't mean that everything here is going to be, you know, economically mineralized. Maybe 60% of this is mineralized, but with higher grades, if you know what I mean. It's like average, let's say the average intercept in grams per ton of the shorebed shear is like, you know, 5 meters of 5 grams per ton, or grams per ton AU equivalent. Maybe at the end of the, I mean, if you calculate a tonnage with those grades and those widths, but in reality it might be like 60% of it can be mined, because then the grade is like 6 grams per ton, if you know what I mean. It's like, not, obviously you're not going to mine this entire plane here, but maybe, let's say 60% of it with an average grade that is higher than the actual average grade. You know, some drill holes they've hit that's not going to get mined, but the ones that show a bit higher grade are going to be mined or whatever. And what I always like is, like, if we're talking, okay, when do you need to take money off? I mean, if we're thinking, okay, what could the upside still be? If this is a multi-million ounce high grade discovery, is this a lot of money today? It really isn't. I mean, mines out there, even, I mean, take a 1500 ASIC mine, for example, with gold almost at $3,000. I mean, let's say, you know, $1,400 per ounce in margins. If they have even, quote, 45 million ounces of quite economic gold, that's not a high price for that. But in the also it's like, okay, do we, I don't like to you know, needing to have accuracy in a sense, because let's say I overpaid for something, then I want to get, quote, saved by the fact that it can still grow and get better, that it can grow in and past the price I paid. And that, I think, thankfully, we still have, because a lot of the zones are still, and here you can kind of see, I think this is the shorebed zone placed. But here's like, remains open, so it's like, even if this is the plane, not everything necessarily is going to be, you know, oh, here they actually have, you know, well, here are for a few holes, I guess. But it's like, maybe, you know, from this entire plane here, you know, let's say 60% or 50%, whatever, but with a higher grade than just the average. Bonanza zone, of course, I mean, that's like, I was going to say the bread and butter, but you can see here, for example, like, okay, 272, 8 meters of 2.22 grams per ton. Is that going to be economic? Is that going to be mined? I don't know. The 9 meters of 34 grams per ton. Yes, you should make huge bank on that, obviously. So again, it might be one of those where it's like, okay, we have an idea what the tonnage is, and let's say 40% of it is going to be getting to a resource and reserves, but the grades will be, I mean, higher than, let's say, 4.4. Maybe you don't mind this, so we cut that off, but around that there's a, let's say, a zone with average 5 meters of 20 grams per ton or something, yada yada. And what I was going to get to, which is great, is the fact that, I mean, this could surprise even more because there might be stuff happening at depth. And of course, if they find something, I think they're like new deep zone discovered below the valley floor, quartz vein visible gold. So it's like, this is still a monster in a sense. I mean, it's a multi-headed hydra up here, and I think pretty much every zone is still wide open. But you also have the potential at depth, and you have the potential of, if they show that, like Jackpot Zone, Treasure Island, which they drilled with really good results on the, where's that? Well, Blue Origin, expanded land package, Treasure Island, VMS style. So it's like, that's the beauty of it. It's like, I don't like to need accuracy in a sense. I want there to be a long runway. And it's like, if we're talking, what is the blue sky here? I mean, is that higher than 318 million Canadian when gold is at almost $3,000? Yes, of course it is. Is that a guarantee? No. So the risk is, in a sense, what is the risk that at the end of the day, if I hold or bought now, at the end of the day, fast forward 1, 2, 3 years, give it some time again to let the pipeline play out and whatever they're risking to happen, that what they have is beyond any doubt, let's say, worth less than what I paid today. What are the odds of that? We know the zones are wide open. We know what kind of mineralization they've hit. We know NICU and mining just got in. We know how valuable ounces in the ground are right now for an economic mine. We know, Canada is a tier 1 jurisdiction, all that. I still think over the next, or in the future, I still think the risks are to the upside in this case. If they would prove out, let's say, 6-7 million of highly economic gold, I mean, that could be literally worth, a couple billions. So I'm not in a rush really to do anything. In the meantime, it's going to swing like crazy, because I think, again, we have entered a kind of recognition phase where the market and the narrative is now accepting that this is not might not be an ordinary discovery. And then it's like with McEwen just coming in. So the more positive assays comes out, especially if we're talking, discoveries as well, like, okay, the Treasure Island and Jackpot, and let's say at depth there, it's just gonna, I think it's gonna just supercharge the narrative in a sense. It's gonna get, people are gonna get more and more convinced that this is like the potentially the next Great Bear takeout. And obviously Great Bear got taken out, I don't know if it was, I think it was like $1.6 billion CAD, 1.8 at $1,780 gold price. If that is expensive or not, I mean, today it doesn't look expensive because it's a 6 million ounce deposit or 5 or whatever. My point is, there's still plenty of room to the upside. That doesn't mean I'm all in Goliath. That means that I'm not really in a rush to sell, because I think the risks are still to the upside longer term. Yeah. I mean, I don't know. It's like maybe you're. I was gonna say you're used. I want to find cases where it's like I can be wrong in a sense. Uh, that okay again if I buy what's the risk? I mean, is this gonna go down to zero? It's like, is this what everything they found, is that gonna be worth nothing? No. So it's like I might be able to see like, okay, I don't know, what's the risk that it's gonna be worth half of this? I think that's relatively low, just given the assay results. So I just don't see how this could become like worthless what they found, but I can see a lot of ways that it can get even better in a sense. But so basically it, and that's why I also again I don't have any. I don't feel like I'm stressed or rushing out to sell my entire position because it's gone up. I'm just kind of riding with this in a sense. But it's gonna get swingy like always. But again, it's like if we just do it simple, okay. If we went into a time machine 2 years from now, do we think we're gonna be up or down? I wouldn't be surprised at all if Goliath was maybe up a few 100% by then. That's no guarantee, but I would be somewhat surprised if I'm down on it. Altamira just put out some news. Gold trenches 17 meters, 1.5 grams per ton gold, 200 meters south of the Caggiero. So it's like low-hanging fruit stuff. Not necessarily discovery. Let's say. So this is where was it? It probably was this. 80 meters, 0.6. No, wait. Yeah, okay, 17 meters. So this is low-cost exploration because they still haven't raised money. This is one of those cases where it's like they have so many targets, and obviously this deposit is gonna grow as well if they put money into it. And that's what's interesting in a sense today with this gold price, that some juniors with relatively small, let's say, resources, but if they're low capex and at this gold price, I mean, this is 700,000 ounces, around that. If you have 700,000 to 1,000,000 ounces of like a low capex startup, let's say heap leach operation, whatever, and you produce 60,000 ounces a year or 50,000, I mean, at these gold prices, that could be worth hundreds of millions of dollars. So I guess what I'm saying is I think Altamira is super cheap relative to basically what they have at these gold prices. Plus, the big thing for Altamira is more the fact that they have so many potential targets, including Maria Bonita, which should be very economic as well at today's gold price. So they have all these new porphyry gold targets to test. So it's going to be very interesting to come back in 2 years and see what has happened here. And again, this story right now is boring. That's why it's cheap. And since they don't have much cash right now because they haven't done a financing, they can't really. Nobody can look at this story and see, oh, I could get quote rich tomorrow. But I think this is gonna go from right now quite boring. Nobody sees any reason to buy it, except for if you look at what they actually have and all the potential they have. But as they get money again and start drilling, we have no idea. This could turn into a multi-million ounce district, and it might be worth, again, several hundred millions of dollars. And it has a market cap of 22 million CAD. So do I see some upside potential in Altamira? Yes, absolutely. Is there a guarantee that they'll have a must-own project, let's say? No. I wouldn't say that, but they have for sure have that kind of 10, 20, 30 bagger potential over the longer term. So I'm basically look to, I hope I have some money free when they do a placement. And of course, there's also the risk that they might do a strategic investment. I mean, Aura Minerals or whatever they're called, the Brazilian-focused mining company, they're already invested in them. So, I mean, there's a chance that there's a deal that happens. Kind of same with Brixton in a sense that there's so much geological potential. It's so cheap. There's so many targets. I was gonna say that you can create a lot of value just by throwing money at it. And if there's a big pocket, it's like, okay, we'll fund you because we see the potential here and we want to have whatever 10-20% of the company. Yes, that's something I could see happening. But yeah, this is a story that's basically the blue sky potential has gone up and up. Where was it? Oh, okay. Now where was? Okay, I was in the news list. Yeah, and at face value, even that 700,000 ounces. Again, if there was a PA out on the Cajero Central deposit, and you use spot gold price today, that MPV would probably be 20 times at least what the market cap is. Yes, just something to think about. Obviously, it's like how you make, let's say, big money in this sector is that you're seeing stuff that hasn't happened yet. You're buying future news releases before anybody are pricing them in, right? I mean, that's basically it. Because if we just fast forward the tape 2 years, let's say, okay, they take in some money, they drill out Maria Bonita or they make another discovery, whatever, and it's like they've increased Cajero, and all of a sudden in 2 years from now they have a PA out on, or 2-3 years out, they have a PA out on 1.5 to 2 million ounces, and I don't know what gold is going to be at that point, but it's like, oh, okay, we have an MPV of $1 billion, and you bought it at with some dilution, like 25 million CAD in 2025. It's like, you know what I'm saying? It's like, do you need 100% guarantee for that to happen? No, of course not, because those would be outrageous returns. But if you find a bunch of those kind of stories, it's like you need to maybe be right in 1 in 5, 1 in 10 or something, and then it's like, okay, what's the risk really? I mean, is Altamira risking to be worthless? No, they have 700,000 ounces of gold, so that's kind of going to cap it in some way. And of course, it's not the focus right now, but that should revalue in a better environment. And it hasn't now. And again, I think we can explain why, because the market is expecting them to do a raise. So it just refuses to trade it higher. But if when they do a raise, all of a sudden they have cash, which can lead to discoveries, can lead to more positive news, and starting off at a cheap level. So that's why you sometimes see, really big revaluation trains leaving as soon as the financing overhang is gone. Hannan Metals, that's really been a performer as of late. They announced Hannan channel samples 69.1 meters at 2.4 grams per ton, including 26 meters of 5.4 grams per ton from new alkalic epithermal gold find at Previsto in Peru. And this is the target I've been talking about for some time. I actually didn't know, maybe I'd forgotten, but I didn't know they were actually trenching it. And what I talked about is the fact that the target, let's find it here, the Previsto giant targets porphyry CUAU. So this is a gold in soil anomaly that's like largest F, and then the question is like, where do you even start when you have this kind of targets? Like, okay, you can walk 5 kilometers that way and still be on a soil anomaly, and you can walk 5 kilometers another way and still be on. It's like, where do you begin? I think it's hard to fathom the scale of this one, but obviously they have done some, why can't I open this one? Let's try this. So here you have, I mean, this is basically, they've outlined the higher soil contours, let's say the most meaty, most soil gold above 0.1 grams per ton. Is that footprint? Yeah, so I mean, basically here you have the light green and better. It's like that's the considered to be the soil anomaly, and then you have, as they marked out here, I think that's this here, most soil gold above 0.1 grams per ton, so even higher. And again, look at the scale of this thing. I mean, this obviously the entire soil anomaly is huge, but just the higher grade portions, like this is a 1.5 kilometer scale bore, as it says here, 4 kilometers, 4 kilometers. And then they did some trenching. It's like, okay, 26 meters. There was some high grade pops in this, including 26 meters 0.5. I think there was even maybe some higher grade pops in this as well. So it's, I mean, I'm not gonna say smeared, but it's like it's not even 2.4 grams per ton, but it's like 26 meters at 5.4. I mean, am I mistaken, or was it, if I recall correctly, it was yeah, okay, so it's like peak acids, 3 meters of 12 grams, 3 meters of 11, 0.0 meters of 16. So I mean, potentially kind of a I was going to say a vein swarm, who knows, right? I mean, but I don't think that's too uncommon for like alkalic systems. The channel remains open both to the north and south, and grab samples outcrop located 62 meters to the west, acid 0.8 grams per ton, 7% or 7 grams per ton AU. An east-west shorter channel connects the northern end as a 7 point. That's also highly anomalous, obviously. So it's like they just, let's say, picked a spot, dug 2 trenchers, and they're finding gold. So then they have an idea what's here, what's under all of this. What's the longer-term picture gonna look when they start doing real work here, and you have trenches here, whatever, and they're drilling this. I mean, it's believed to be an alkalic system, so I mean those are the giant ones like Porgera type. Porgera is what, 40 million ounces or something like that. And the beauty, of course, is like here, copper discovery, Previsto Central, another trench, 192 meters. Here you have gold discovery. Here AUCU anomaly. This zone is characterized by strong anomalous gold in soils up to blah 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 and mineralized boulders, and CUA anomaly. So there might be many different things. It might be again a copper discovery. I don't know if that's in that case a porphyry, for example, or some other kind of copper thing. But it's like, and I think it. I mean, most of the copper tends to be leached at surface, so these are very impressive grades. I don't know why they're that impressive at surface. Maybe it's a very robust system, possibly. But it's like, yeah, and I've said this about Hannan for a long time. It's like, why I saw it again as a hodl case. The simple reason is that they have one of the absolute largest pipelines there is in the junior space. This scale doesn't do it justice, I was gonna say. These are absolute immense land packages, 100% opportunity, might have discovered their own new porphyry district, which comes with, because porphyry spawn a lot of other stuff, including, let's say, giant gold systems as well. Here you have a bunch down here, so it's like, we have no idea. Obviously this is like major worthy kind of a land package. I mean, they could be busy here for the next 50 years or something. And the story is so big, and they have the San Martin CUAG. I mean, they have so many irons in the fire, obviously, as we see on the reaction to the news, etc. Here you see the beauty of tight shareholder base, strong hands, etc. Because what happens to most juniors, yes, okay, they haven't actually begun drilling yet, so it's like the real exciting stuff hasn't really started on their new, potential porphyry district. But here you can kind of see it's like with good news, it gets walked up. Whereas if you have a non-tight share structure, you have a bunch of traders in it, you have a bunch of brokers that are waiting to get in and finance the company, meaning they slam the stock, and let's say the story doesn't, the PR is not good enough, the story is not good enough at the moment, or nobody cares really. The shorters, let's say, might think that, they're gonna accept our investment, or placement. So we might as well, regardless of what the news is, we might as well slam the stock and cover our shorts in the next placement, and let's say they get warrants or whatever. So it's like, okay, we made money on the short side because there's not enough buying interest to keep the company fair valued regardless of what the news is, even if it's good news, so they can sit on the stock. Then they can give money to the company, they cover their shorts, and they get warrants and whatever. So let's say it is a, quote, intact story with potential, and they get, 2-year warrants from really low levels. It's almost, I was going to say it's almost criminal, but it's like, yes, if you can quote, manipulate stuff like that, why wouldn't they? You know what I mean? But in this case, it's like, I don't think there's any real opening. I don't think there's going to be a shortage of money wanting to invest in Hannan Metals. I don't think they need really brokers, or they don't have to beg Toronto bankers for money, for example. I think I don't know how many majors would be interested in earning into this project, for starters. Now, are they gonna self-fund it themselves or spin it out? I don't know. And then we go back to, okay, so what should one, let's say, do? Some obviously bought on these trenches, appreciating that this is de-risking this huge target when they're able to trench and find high-grade gold in the bedrock. So it's like, it's not just a super weird soil anomaly, but legitimately like, hey, they've already found high-grade gold structures, let's say. So some bought in now, and I go back to it. It's like, in the short term, I couldn't make a case, a bull or bear case for Hannan. I have no idea where it's going to trade in the short term. If I zoomed out and took the perspective, okay, if I buy it here and wait 3 years, a hodl case, again, because of the huge pipeline. What could have happened in 3 years? Given the amount of targets, given the land package, given the people involved, given the tight share structure, because these are also, Michael Hudson, for example, and who's, running Southern Cross / Mawson. And you have a Swede, which I think Lars is the CEO, and I was going to say, it's like a Swede will do a very good job. So I have a very good feeling, or I don't want to jinx it, but it's like, I believe in Lars. The amount of potential within their land package is immense. So what happened? There is a non-zero chance that they might end up making one huge alkali gold discovery and porphyry discoveries and other epithermal discoveries and what have you. Which appears, given the soil sample, this is an unexplored area of Peru. So here you can find stuff that starts at surface, as we see here, or at least at shallow levels. So it's like getting into whatever famous, let's say, mining that is famous today, mining district, but you found it brand new where you can walk up to drill targets. So this is a relatively unique, or a pretty unique story, exploration story actually. This does not obviously happen often, that you find a new frontier all of a sudden, especially in a known place to produce giants like Peru, Chile, what have you. So yeah, I mean, blue sky again. I don't know. Is there, like Goliath? Is there still huge upside potential if you give this story enough time? Yes, I do think so. Is it super cheap? Again, we're talking risk reward here. What do they have right now that's going to be mined? What do they have right now in terms of tangible value? Not much. So so it's basically a leap of faith risk reward bet that everything in this picture and on every single slide and every single target here in the hands of these guys, at the end of the day, they're gonna prove they have something that is worth more than, let's say, 138 million CAD. And what is the blue sky? I have no idea, because it's hard to quantify this amount of targets, the scale of these systems, the scale of this system. Is there billion-dollar potential, multiple billion-dollar potential? I would think so. So, right now, my personal strategy is to, I mean, I was, I am debating about adding. I mean, it's not a huge position for me. It could become huge if I give it enough time. That also makes it easier, because that's again the risk reward factors. Like, you gotta capture the reward side enough in these stories so it pays for the risk side in these stories. I cannot be betting on cases like Goliath or Hannan Metals, whatever, and if I'm up 50%, I'm selling everything. In that case, you're never going to play out the reward side, so it's not going to pay for anything. If I sell a quote high risk story for 50% plus, that covers exactly one high risk story where risk appeared, and success didn't happen, that goes down 50%. And that's going to happen a lot, I mean, typically speaking. And in this case, kind of like Inflection Resources, for example, and some other juniors, it's diversified to the upside. But again, you don't have the luxury of First Nordic case, for example, which has a lot of exploration potential, but it comes for free because the Borealis deposit backs it up. Here, there is no margin of safety per se. So that by definition, regardless almost of how many targets there are, this is still, as far as now, there is no margin of safety. It's just that it has a shit ton of potential and diversified potential. They don't have one target that they need to get lucky on. They have, I mean, just in this picture, they have, well, AUCU anomaly, a copper discovery, immense gold and soil anomaly with a gold discovery already via trenching. My point is that I have no idea how Hannan Metals is going to look in 2 years, but I can certainly see that it could be worth quite a bit more in 1 year, even more than that in 2, and even more than that in 3. And there's a possibility in the future where they have made multiple discoveries, and this is one of the most, I don't know, legendary discovery stories in the recent past, let's say. Is that a guarantee? No, that's why I'm not all in. So yeah, I mean, and honestly, it's like it's fun. It would be fun to come back to Hannan, or check back in 1, 2, let's say 3 years, and it's like, whoa, I mean, and something really, really good has happened over that time, and you're like, whoa, that's cool, and I was on board of it, pretty early stage, and all of a sudden you have they created so much value that it's basically up X amount of times, and it's again paid for a bunch of other stories where that didn't have discoveries. New interview by Michael Hudson. We also have Line 1 announces pricing of 7.5 million overnight public offering. This has obviously been quite frustrating, the Line 1 story. That were share prices back to the lows of the last bear leg in 2019. It's actually a bit lower than that. Almost back to the same price level as the biggest bear, which ended in late 2025, early 2026. And we've had, again, I mean, this creates immense frustration, obviously, because the gold price has not gone like this since 2002. 2020, it's at peak, it's up here somewhere, and then yet the share price is down here. What seems to have been kind of the pattern last, well, here, I think this was a financing too, here. Okay, it didn't really bounce that much, but it's like, I think all of these volumes here, mostly to do with financings. So basically, as a shareholder, you've been kicked in the nuts a few times over the last 2 years. And the expectations kinda have been, or the hope has been that, well, okay, another placement, but this is the last placement. I don't really have any strong opinions other than the fact that, yes, it's kind of tiresome that this is becoming a norm in a sense, that as soon as the stock goes up a bit and some enthusiasm and gold is at peak, new records, let's say, there comes a new financing. So what does that say about the underlying operation? I mean, how is it going on the ground? I can't possibly know that, of course. If they're raising money, I mean, they're doing that for some reason, obviously. I mean, is it an expansion? Is it because they haven't really been able to get into free cash flowing production yet? I'm not 100% sure. At the end of the day, it's like, depends on, I was gonna say, I mean, you could look at it like, okay, things are not going well, I see a pattern here, so I'm tired of this. Sure, absolutely, I can understand that. I obviously have a, what do you call, like a fetish, I was gonna say, for buying low. I hate selling lows. I hate the idea of having sold a low. But it's like, okay, what's the risk here? I mean, the risk is that they're not going to make it work. That's a real risk. Regardless of the good, well, I don't see how they can't make money on the 500 zone, but, well, I guess, yeah. So, I mean, if they just get into the 500 zone, that should at least make money, if no other zone makes money. But, I mean, is it a pretty picture? No, it isn't. We know that, I think it was the last placement that Wally put in quite a bit of money, so that's, I mean, a nice sign. I don't know if he puts in a lot of money here. I'm going to take that as a pretty good sign. But okay, what's the upside? And I said this last time after I saw them do another financing. It's like, well, if they make it work at today's gold price, even with this raise, that's not a lot of money, right? I mean, if they have whatever, let's say they have 40,000 ounces of production. Let's say gold price of 2,800 minus whatever. Let's say $1,600 ASIC times 40,000. 48 million USD per year. The market cap is around 100 million CAD post financing, I guess. So you know what I mean. So it's this Schrodinger's cat situation. It's not pricing in that they have a free cash flowing mine and have good margins with gold at 2,800, which also might be the case given that they need to raise again. But it's like, is this the last hurdle where it's like they have something they just need to fix that's been screwing that up? No, I don't know. Or is it to be just more aggressive? Whatever is this? I don't know. That's the that's the problem. So I don't have any like strong opinion either way. I mean, this might in within 12 months they like we find out, oh, now they're free cash flowing or whatever, and it starts to revalue to 300 million or something, or they never make it work. And what happens then? I don't know. Does somebody else buy them? It's like, I mean, you know what I mean? Because, okay, well, we think we can make it work. It's like, I don't know. So I don't have really a strong opinion. It's not like, oh, it's down again and it's at a low price again, so I'm diving in with, both hands, or, grabbing shares with both hands. No, because I don't have a really clear vision right now, and I hate the risk at this point in time, if you know what I mean. So I kind of see it as I don't know. I mean, maybe one could see it as a high. I mean, almost like an exploration play. It's like high risk, high rewards. Like, if it works, this is the last financing. It's gonna go up a lot. If not, then they just have. Then they're never making it work. So they're gonna dilute until nobody gives the money. Yeah, then that's a failed story. That's a. It's not just a store that's, let's say, gone down. A lot of stores gone down and then come back up when sentiment improves. But then that might be like, hey, if you can't make this work at $2,800 gold, it's like, nobody's gonna keep putting in money. You know what I mean? So in that sense, I guess one could. I don't know what the odds of that are. That's the problem. I have no idea what the odds are because I don't know exactly what's going on. I'm kind of on the fence. So in that sense, maybe it's like. Maybe especially, let's say you can get into the placement, the sidecar, and get some warrants. I mean, those are pretty good terms, I must say. But I think that's gonna be probably be full. Yeah, I mean, this is one that's very hard, actually, and I don't have a strong opinion actually either way. You could obviously almost treat it as a discovery story if you want. It's like, okay, as soon as they show that they're able to have positive free cash flow, I'm gonna buy in then, and maybe that comes after a 50% run, but it's like, okay, then you're accepting lower returns for lower risk, if you know what I mean. Or like, okay, you're buying this dip before they, it's obvious that they can make it get profitably mined. You're accepting high risk, but you'll get higher reward in case of the risk not happening. And or maybe should one bet on, it's like, okay, well, now they're gonna be able to at least get into the 500 zone, and then they're gonna be cash flowing. It's like, if I knew that, you know what I mean. So it's like there's a lot of scenarios to ponder, but I sure don't have an obvious opinion on what might be the right thing to do now, unfortunately. Magna Mining announces upsize to previously announced private placement. The company intends to use the net proceeds of the offering to advance the company's cyber. I mean, these guys are one of the best capital allocators in the space. I mean, the amount of value they've been able to steal for not a lot of money, it's just crazy. So it's like, sometimes you see it's like, oh, dilution money. It's like, you have no idea what they can be creating with this raise here. And I'm pretty sure there's no warrants or anything like that. At least option to increase the offering. So I don't worry about it. Still a staple in the hodl folios, even though I don't really know what's going to happen with nickel in the short term. But I just know, the case isn't really unchanged. I mean, the Magna Mining, I don't have we can do it like this. If we're talking, and that's why it's in the hodl folio, if we're talking, this is the longer term picture: Shakespeare, Green Hill, future additional mines, future Shakespeare processing plant, yada yada. Let's look at the presentation. Again, I think no-brainers or hodl cases should be, pretty simple to explain. And so this is when you're thinking about a hodl case, you want a long runway. If a company doesn't have a long runway, it's like, what's the value that's going to be created? How can the value possibly be a lot more in 2, 3, 4, 5 years than it is today if they have nothing to work with? So that's like rule number 1 for a hodl case, at least. Because if you're talking a mature play, they have no real growth, they have a deposit, then you're just playing the sentiment swing, right? This case, they have Green Hill, they have Shakespeare, they have Levac, they have McCready West, they have Podolsky, Kirkwood and stuff. And this is basically in production already. And they started off with just the Shakespeare deposit. So now with all these acquisitions, you can see they're commanding land package and several past producing mines, one producing mine, a development project here, a development project here, lots of exploration potential, of course. If you didn't know it, if you saw this land position, you would think, well, this has got to be a major mining company, right? Especially in Sudbury, of all places, because real estate doesn't tend to be cheap. But it's special Sudbury, but these are Sudbury specialists. So in the hands of these guys, they know how to create lemonade from a lemon, for example. So again, if we just make it easy for us, do we think, give these guys who have proven that they can make some of the best acquisitions in the space, they have the track record from FNX showing that they can profitably put mines into production, and some mines were put into production without, I think, a PFS even. So expert executioners or experts at executing, that's one takeaway. We know they have some of the best Sudbury geologists. So on the exploration front, they have also extreme competence. Give these guys a few years. We already know what plans are to get more and more mines up and running. So what happens if that plays out? Is this going to look cheap? Let's say that coincides with a bump in nickel prices, bump in copper prices, bump in PGM prices, etc., etc. I would have to think there's like 5 to 10 bagger potential from here in Magna. It's just gonna, depending on what the metals do and all that. But if they execute, if they execute and put, let's say they have 3 mines up and running in 3 years or something, or take 3 mines in 3 to 5 years, plus you have the benefit of higher metal prices. What is that going to trade at? I don't know. What kind of returns would you be happy to get in a 3 to 5 year period? 200% would be great. Again, the market average is 9-10% per year. So obviously that would be way above the stock market returns. And what are the chances of that happening? I think that those odds are pretty good. And then you have all the discovery potential. So, I think this case is where it's probably gonna be up quite a bit and could be up a lot over the next 3 to 5 years. That's as close as I can get it to. If I had a time machine, that's what my base case is. That's a pretty good position to be in. What are the odds that you're gonna be down in 3 to 5? I don't know. I mean, what would they need to do? Not sure. Can there be volatility along the way? Of course. I mean, nickel prices plays a part, copper prices plays a part, yada yada yada. I just think that I don't think there's any reason really to. I mean, I think there are relatively low risk, good returns in the future for Magna with the option of very good returns. And I mean, blue sky would be metal prices quite a bit higher, let's say, especially nickel prices quite a bit higher at a time when they have, I don't know, 3 mines up and running, producing who knows how much cash flow, plus exploration success on top of that. Then I have no idea what it could be worth. Those are luxury problems I like to have, where it's like, base case is that you'll make good money with the option of making a ton of money, let's say. Those are stories I really like. And again, it's like, why is it hodl worthy? Well, I don't second guess a single decision this company makes. They're the best you can possibly find to do what they're doing. They have huge skin in the game, so they're gonna be thinking about creating value for Magna 24/7, 7 days. 24/7, 24 hours per day, 7 days a week. They're probably dreaming about Magna as well. So I have no real reason to, be an armchair, whatever. It's like, oh, well, would you raise money, whatever. No, they know much more what the best steps forward are, and they've done it before. So I'm just along for the ride. They're trying to create a lot of value for themselves by doing what FNX did, and I'm along for the ride, and I don't have to do anything. That's a great hodl case. Who knows? Maybe in 3 to 5 years we're gonna have dividends or something, which could be really, really cool. These are the stories, really the stories I like from a hodl perspective. I don't need to be exactly right. The odds of being exactly wrong, meaning it's like, well, you give these guys 3 to 5 years and you're down 50 to 100%. I think that chance is very small. Not impossible, but if I compare what could have happened to the upside and what the probability of that is, it comes out to a very good risk reward in my book. So yeah, I mean, it's not often you find that junior where it's like, okay, you literally have the best people doing it. Again, huge runway. You have margin of safety because they already have, they have what, five resources, 5 deposits. Like what is it? PFS stage Shakespeare, PA stage Crane Hill, McCready West producing. Levack and Podolsky might get into production in the not too distant future with discoveries to build. Yeah, so it's like there's so much upside. I don't even know where to begin. Borealis announces upside 10 million bought deal offering. It's gonna be interesting to see what Borealis does with this money. They obviously have their advanced project in Nevada, but they also acquired Gold Bull Resources, I think is the name if I'm not mistaken. 10 million, it's pretty good size, half a warrant, so that's okay. It's not, again, it's like at least not a full warrant. So let's see. The idea has been to be a consolidator, which they've shown that they are, and they have some pretty big names in it. So this is also one that's going to be interesting to see. It's like come back in a year or two. It's like, okay, what have these guys been able to produce? And then they have none of the projects right now are like standalone must-haves for any mining company. The risk, so there's value, especially at these prices, and especially since their flagship asset is fully permitted. But it's not a huge project yet. I mean, it has huge or quite large historic resources in sulfides and transition, but they will still have to take some risk, let's say, to really show or to really increase the value in a sense. Even though one could say it's like, well, at this gold price, just what they already have is worth more than the market cap, and sure, that makes sense. But still, it's like you want you want a home run, I was gonna say. So yeah, we'll have to see what happens here on the point of home run. I've begun to nibble again at home run. I haven't really done much with the position. I've just basically been hodling. This is one of the most kind of bashed stocks that I have seen. Quite a huge amount of bashing, which, I mean, I don't know what the reason for that is. In the sense that, I mean, I own quite a bit of shares of Homerun. It's a large position in the hodl folios as well. And I seem to not worry as much as, let's say, some of the bashers. So it's sad. I mean, if I summed it up, I mean, there's really only been positive / encouraging news for quite some time. I think there's quite a bit of traders in here. I mean, it kind of stopped now around $1 because that's like, whatever, a support or something. So this looks like it's, traders, bashers, and some shenanigans happening with the price. Yet the fundamentals, I don't think, have followed because there has been no real negative news out, so it's just price that's gone down. So okay, I mean, I don't try to predict stuff. I mean, it's like Magna. I had no idea Magna was gonna retrace, even with the crash. Let's say nickel prices was gonna retrace down to 40 cents, which, because why would it? Because it was just absolutely mind-numbingly cheap, and then I was able to value shuffle back a bit, let's say, because I already had a huge position before the run up. So obviously I had to take some profits, and then I bought it back again when the risk reward became obscene. I mean, it kind of became better in Magna, I think, at 40 cents than it was at 30 cents before the run up, or close to it, let's say. Sure, nickel prices were or quite a bit lower though. So who knows? My point is that, again, it's price versus value. We know what the stock price has done, but could you look at the news releases and follow and guess that, okay, the story became better here, and then it became, whatever, 50% worse since July? It's like, no, I don't see any obvious thing that would make the value gone down 50%. So I'm nibbling again. I mean, most of their news that's been coming over the last, all of this, there's so many irons in the fire, you kind of forget. Plant design, hiring, partnerships, discovery, letter of intent, memorandum of understanding, marketing. Now we're back to October. Technical consultant. So it's like, they've been reporting on a lot of seeds and planted a lot of seeds, and I simply think, and I'm not a silica expert, I simply think that they have a lot of seeds planted, and I think it might start to pay off, let's say, in 2025. And I mean, blue sky is that, okay, they get the, glass plant operation up and running, they sell silica sand, high quality silica sand, they get the femto, the laser purification up and running, they have other partnerships with energy storage and stuff like that. So blue sky, I mean, yeah, I think there's quite a bit of potential, given that solar seems to be still basically have a very high growth potential, and at the end of the day, I mean, they have exceptionally high purity silica, which is a rarity in this world. So I don't think it's pricing in much what is it pricing in? Is it pricing in, that they'll have a solar glass manufacturer? I don't think it is. That they'll be able to sell 500,000 tons or whatever of high purity silica just from washing and sorting. I don't think it does. Is it pricing in the laser purification working in a commercial sense? I don't think it does. So that's, yeah, I mean, it's, one could say maybe that it's, I mean, if I understood it better, I might not look at it as like, even high risk, actually. But I think it has, potential for very high returns given, the news out there. And it's simply gone down in price. So I'm nibbling a bit. As always, is guaranteed that this is going to become a billion-dollar company in 2-3 years? No, absolutely not. I mean, to me, I can see it as a guarantee. I know what price I'm paying for it. So along with basically almost every other story, it's like, to me, this looks like, potentially a very good risk reward. But again, that's why I don't own a single company, because I don't know for sure exactly what's going to happen with any single company. I just know that if I buy stuff cheap enough, it needs less actual success to create the same return, and the cheaper I get, the higher the potential returns, obviously. So it can pay for more and more stories that where the reward side didn't work out. You know what I mean? So yeah, as always, I mean, I'm biased. I own shares of all companies. I am sponsored by some as well, so twice biased. Don't invest money you cannot afford to lose. Don't invest money just because I own some stock, or don't sell because I don't own some stock or whatever. You should buy exactly the stores that you understand why you bought them for, and for a good reason why you bought them. And this is not buying or selling recommendation. I don't have a crystal ball. I have no idea which stock I own, let's say, that's going to perform the best over the next 12 months or 24 months or 36 months, or I don't know, even know what stock is going to be up tomorrow, or next week or next month, and all that. I'm just using some risk reward probabilities and making bets, and then allowing bets to play out. Thanks for listening. Bye now.